The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 12th day of July. My pleasure to be here with the Dow up 209. This is very interesting. Yesterday was down pretty sharply, but not even close as bad as it could have been with all the negativity that was going on. What I was looking at is within the chart formations, I was talking about the bifurcation, the difference between certain indexes that were holding quite well and other indexes that were quite weak. I also said I have a Chapman wave reading, a chin gauge reading that suggested that within 2 days there should be a 9 to 11 point rally in the E-minis, and that'll help it down the S&P. And that could come from lower down, it could come from anywhere. Well, it happened overnight. And one of the things is that when I was looking at the charts yesterday, two aspects were really clear. One is that the stochastic had reached the 87, 89% area in the daily chart on the left here of the E-mini, trading right now 91%. The MACD had expanded, the 9-period differential had expanded really nicely, crossing the slow-moving average. That's 12.26, 9, 1 and 1. So we're looking at the way the makeup is on this green line, the faster-moving average, is that it's called the 9-period differential. And it is, both of these are exponential moving averages, which I like. I like this very much. And I'm looking at this and I'm saying, gee, just a little peak B right here. If it's a B, it could be an E, but it could be a B as well. Holding well above the 9-period moving average, the green line. Well, folks have noticed that over the last many, many months, I've done something a little unusual in that I had made the crossovers, particular crossovers that I like, I'd give them red and greens. That was quite a long time ago. I'm kind of formalizing it now because I've done it in all the time frames, and it just says to me very quickly that using particular parameters, the red would say it's negative and the green is positive. It's very different to the Chapman wave methodology. It's just another incremental move in trying to make my system as robust as possible. Done that for quite a while. I was asked about it. Most people have not noticed it. I don't like to make a fuss about things that are just incrementally a step up of clarification. There's no difference to anything that I've done before. I just, a long time ago, changed the colors, and I did it particularly in the short-term trading that I do. You can see right here, the pinkish color is when I get certain parameters that are moving down, and then it goes to green. So it's just a real simple thing. No great shakes, but I've done that for quite a while. And I just wondered, I had a question about, So the E-mini 27.98 would start a new leg C to the upside, and then I would have to put an up arrow. So when I'm that close to things, I had a question today. It was a good question. Based on your negative outlook yesterday, sounds like shorting this Chapman wave trend gauge pop is the way to go. And I spoke about various sectors. So on the Dow and the SMHs are still quite weak, although they've turned around. They're up a little bit now, but they're still pretty weak. Based on those parameters, I did not want to, and what I said this morning to subscribers, we are mostly long. We have long positions. We also have short positions, but we are mostly long. And as a result, my bias has to be that I'm looking favorably at certain stocks maybe and certain sectors maybe. I'm not looking at overall patterns, because what I'd said, yes, a few days ago, in fact, I said, this is a very diverse market. There are certain charts. For instance, let me just take 1 second here to show you something. CTAS, Cintas, that I've spoken about many times before, has just made a new leg B, leg C to the upside. 1 penny made the peak yesterday. Now it's broken it at an all-time high, and that I have to consider as a positive. Okay, CCI, which is Crown Castle, a REIT. It is in the communications. Also very close to breaking this Chapman wave falling axe formation to go to a new recovery high. There are a lot of stocks. Amazon, look at this, Amazon, boom, all-time high. Leg D, way above the 1763.10 last high of the 21st of June. Really plummets down to the 1640 level for Amazon. That's a plummet. And now it's screaming up 31 at 1786. A very diverse market. Let me go back to the story. So the E-mini has gone to a leg C in the 120-minute chart. The cup formation suggests strongly that it's going to try to tackle the 3 times hit 2797.75 back on the 10th and 11th. I think it's going to do that. I didn't want to add to shorts here, even though as I'm going through this, you're going to see why I'm talking about a diverse market and a bifurcated one. Look, the Dow very clearly, INTU, very clearly has a new leg C to come if it goes to 24,946. And that would mean that the MACD is 85%, which is good. And the MACD expanding the histogram at 59% is very good, above the 0% line. And the stochastic at 85% is good. On balance, volumes are lagging a little bit. That's important. And the RSI is okay, not great. So I'm just saying, hey, cup formation, arch formation. Cup formation, arch formation. This is still potentially a cup formation because that weekly chart says it could be a little more to go and then maybe it's going to fail. Let me get out of the 120-minute chart here. Why? Because it's quite necessary now for me to show you monthly charts. See the monthly chart, this green candle, halfway into, not even halfway into the month, Monday will be halfway, is so far very nice. Not great, but very nice. Walking the 9-period moving average, the green line. The 14-period is the black line. Weekly chart says, yep, arch to cup, arch to cup. Now we're trying to make a little bit of a cup once again. Okay, S&P, SPX. S&P right now is trading up 20 at up 0.75. Dow's up 0.86. And we'll get to the Qs in a moment. And the S&P is within 279.59 starts new leg C to the upside. It's at 274.72 at the high of the day. Man, I tell you, this is really close. A point, just less than a point away, and it should make a leg C. That's going to help the monthly chart there a lot, and it's in leg D in the weekly chart, right in the zone that says this is about where there was going to be resistance. It better happen in either the next day or two, or under 27.90. Should I say 96s? Yeah, 96, 97, somewhere in this range. All right. Okay. Q, all-time high. Leg D, recycled in a beautiful tight cup formation, almost a V-shaped formation. At 178.94, up 2.53, up 1.43%. Leg D in the weekly, leg E stands in the monthly chart. So that just before the break, I'm going to say, let's go to the IWM because this is very important. IWM is lagging. 167.22, up only 11 cents. Isn't that interesting? I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's up 2.11.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So the IWM, the Russell 2000, struggling a little bit now. What's really interesting is in the monthly chart, I have 170.20 wasn't taken out in that run up 3 days ago. Yesterday, there was a pullback. Today made a lower low, tested the 14-period moving average. This is going to get even more interesting. The MACD is good, but making it an M formation. The stochastic has pulled back quite sharply, but it's still good at 84%, same as the on-balance volume, same as the relative strength. Whew, this is going to be very, very interesting. Now, what we want to do is say parameters. Under 166, a close below 166 says, watch out, IWM Russell 2000 beginning to fail. As it stands right now, it's just right in the between. It's at the top of the range. We'll see what happens. Now we can go to gold. Gold is up 3. Having made an arch formation, 1238.80 was the low just over a week ago. Trading at 1247 right now. Yeah, that monthly chart is going to be very important. You see the way that uptrend line was taken out, closed on it last month. This month we've been trading under it, the stashed line. I'm just keeping that in mind. That's all. And what's really important about this is look at the dollar. The dollar is giving back gains from earlier today. It was in the high 94s. 94 was at 70 something. Yeah, 94.73. Trading right now 94.66. I think it's in a range, and I don't see it breaking out just yet. Gets to 95.20 and holds there. That's going to be very important. And 94.40s and 94.20s will be the near-term support. So we'll be watching this very closely. High-grade copper is trying to turn here. It's having an up day, 0.04 at 2.784. We'll see if this trough D is going to hold. It's getting close to at least flattening out and trying for some kind of an arch formation, holding the 200-period moving average now in the monthly chart. That's going to be very interesting. Someone asked me about platinum, PL. At PL, platinum continuous contract, making that arch formation with a higher low, the low that was made at 800.70 on the 3rd of July, ran to 862.10 on the 9th of September, 9th of July, and today made a lower low on the 3 days decline and it's holding the 9-period moving average nicely at 846.90. This is very important. This arch formation should become a very positive move to the upside, and it will if we can take out the high of the 9th, 846.40. It needs to 862.10. It needs to break above that, and right now it's at 846.90, up 11.90. Good on the day, but we'll see what happens. Crude oil at this particular point is down 89 cents. Just peak C1, peak C2, peak C3. Oh, that isn't. That's a peak C1, C2. Peak C1, peak C2 in the Chapman methodology. Pull back here as if it was a D. This is pretty sharp. And that Doji E from last week, I'm watching it very closely. And so far it says very limited upside. Downside could test 69.50 right now. Could test the 67.80s, 67.20s. TLT, here we go. We're going to wrap this up nice and early. TLT pulling back 22 cents at 122.20. And that says, take a look at the XLF. What's that doing if the yields are, in fact, rising just a tad? And we're looking at it up 0.01 at 27.06. Not a great chart, attempting to form some kind of a base pattern right here with a low of 26.61 on the 28th. It's at 27.06. I'm watching this closely. Are you seeing your IMs? No, we've got, Mike in Ormond Beach. Mike, how are you? Sorry, I didn't see you.
Hey,
You'd like to
Basil,
look at-
last week, I was short Bank of America, and I got out on the 3rd. I made like $1.
Yeah, good.
And anyway, I was looking at it now, and to me it looks like it may be starting to form a bottom. Correct me if I'm wrong, but I was thinking about reshorting, and then I saw it on my chart. It broke above the 9 EMA, and it looks like
Correct.
the MACD is starting to point upwards, and the two moving averages moving further apart. So I know they're going to be reporting earnings either
On
tomorrow
Monday.
or sometime next week.
Monday the
But-
16th, yes.
So I was wanting your opinion if you think it's forming a bottom, or maybe to possibly reshort it again.
So, first of all, congratulations on shorting this because it made a peak E at 33.05 on the 16th, the week of the 16th of March, and it took quite a dive, went down to the 27s. So, in the monthly chart, what it's done is made pretty much lower lows and lower highs ever since it made that high, and it's held the 9-period moving. It's held on a closing basis so far this month. It's just above the 9-period moving average, but since it broke above the 14-period moving average back in August of 2016, August, it goes to 16.24, and it hasn't touched that 14-period, the black line in the monthly chart, since this month, and it just touched it at 27.67. That's the level. Now, this is going to be very interesting. So just for disclosure, we're long, my opening call subscribers, we've got the BAC, Bank of America, and what I'm looking at here is there is a chance, and this is why it's important. In this particular market, there are moments where there are some stocks where you actually have to be in it beforehand, because if it's successful, they gap up, and then it's kind of tough to buy the gap because they gap up, but the general market's not really following. You know whether or not it's going to continue higher. So you just want to be in it. But what I've done is I've put a fairly tight stop. In fact, it's a pretty darn tight stop. One of the reasons being, I love the candle, the gap up candle of the 9th. I love the fact that it went higher on the 10th. I didn't like the fact that it closed below the closing price of the 9th, which was at 29.05. Next day it closes at 28.83. But we've already had a test of the 9-period moving average. The black line, as he was saying, is holding above it. I quite like it. What I'm going to say to you is, for the risk of, and I'm not sure that if Bank of America does everything correctly, I'm not sure it's going to really skyrocket into the 29.50s. I think it might be a nice bounce, maybe gap up 25 cents, and then hold on for the rest of the day if it's good news, and then it could start moving higher. But I don't want to see a gap and then a failure, or I don't want to see a failure straight away. So I'm keeping a fairly tight stop. I'll make a decision tomorrow whether or not I actually want to hold it through the weekend and take a risk. I just don't, because of the way Bank of America and the other banks, the XLF and all the other banks, the financials, I should say, have acted quite poorly. Even Goldman Sachs, which looked like it was going to have a really nice breakout, is holding. It looks like Bank of America. It looks like most of the stocks. That weekly chart is still quite negative on all of these. So what I'm going to say to you is, I don't know what your risk, I don't know what risks you want to take. Well, we've got a break coming up. Let me do a little bit more work on it if you can hold on. I just want to look to put it into perspective with other stocks in the same category, just to see if I'm right about thinking that as you just said, maybe there's a base forming by the doji candle of last week holding, because if we close above it, that's a good sign. I'll be right back with Mike in Norman Beach. We'll be back, and the Dow's up 280.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we've got Mike from Norman Beach, and there are a couple of things going on. I looked at the XLF, I looked at the KRE, which is a Spider S&P Regional Bank Index, looking terrible. It's down 77 cents right now. I shouldn't say, I mean, terrible on the day. It's making an arch formation, and the 200-period moving average of 60.57 looks like it wants to be tested. It's a 61.47. The XLF, which has Visa, MasterCard, I believe it also has American Express, and all three of them are up, is a lot better looking, but not great. And it's got that triple, well, 4 times tested the 2676, 2655, 2640, I think it was, 46 level. And then most lastly, right here was 3 weeks ago, the 2661. Beautiful straight line, trend line support that it's held. This is what I'm thinking. I try to, I like to look at the market both as a technical, in a technical way, as well as a psychological way, because that's really a big part of what goes on is psychological. And I'm saying to myself, so Mike did really well. He shorted something that most people weren't even talking about in terms of a short. So he did a beautiful trade. And then he got out. Now, the only reason you get out is because either it met your target or there was that moment that said, gee, it could go up, but it could go down. And I always think of that. It's the same as when I play tennis. If a shot comes to me and all of a sudden I really don't know what to do, that's exactly what I do. And the shot that I do is a lousy shot because it didn't know what to do. It could have gone this way, could have gone that way, and then I flubbed the shot. And that's the same thing here, that if you got out because you were thinking, gee, I've made some money and now it could go up, it could go down. Turns out that it did go up. This is the same sort of thing. I'm saying to you that the results of the bank stocks, there are very few clues here other than to say that the trend on the short term has turned up. And there's a pretty good chance that based on what we're looking at, if the MACD, which is good, and the stochastic, which is only at 64%, if there is by the end of the day at least a nice rebound from the 2710 level in the XLF to maybe the 2722 level, that stochastic will improve a lot, and that will give you a better chance of saying, a day to go for some of the financials to report. This could be a nice leg C to the upside. Hey, wait a minute, if they fail, this could also become an arch formation. So what I'm saying to you is the same reasoning I'm suspecting, I'm going to ask you if I was correct, in getting out of your short position, because it had kind of accomplished everything you wanted, and now it was at a point where it could turn. I'm saying that I'm right on the cusp here. If there weren't earnings, I'd say, gee, it looks like there should be a leg C, but it's going to be very important with the banks coming out. And the yields, in fact, have been coming down for the last couple of months. So I'm saying to myself, this is going to be a big test for the financials. I just don't know if I want to say to you, take the risk of either shorting or maybe even buying the XLF. I would rather wait until something like Monday or Tuesday. Why? Yeah. Because if the XLF is up in the 2755, 2760 level, that's going to suggest that it can go higher. And if it's below 2670, it says, whoops, it could go lower. That's too big a risk right now. So I'm not sure what I'm going to advise you, just because you just took off what you thought was perceived as a risk because you had been rewarded nicely. I don't know if you want to just give that back. I'm not going to be able to give you anything definitive right now. I need the result of going above this peak B in the XLF. And in your case, Bank of America, which has the same scenario, it's got a little bit more to go, actually. It has to go over 3 days ago. It has to go over 29.33. I'm going to also have to make some decision about this. I don't want to be trapped if it comes down, because if it pulls back, that could say, hey, bank stocks are not going anywhere for a little while longer. I hope that helps you in a way.
Yeah, well, the reason I shorted it, I saw it had looked like it had support a little above 29. And when it came down and hit that area a couple times and rejected it, looked like support. So,
and then broke it. Right.
Anyway, I had an order in to sell short slightly above there with a tight stop, and then it broke it. And then when it got down a little above 28, that's where I covered it. And it looked like now we may be setting up a new range lower, like a little above 29 to a little below 28.
So you're looking pretty much the same thing as me. So I'm just going to suggest, have a little patience. I don't see why it's worth risking 70 or 80 cents when if you get this right, you're going to make much more. I'd rather just step aside. I'm gonna have to make some decision. We only have a small position in the Bank of America, but it is a position. I'm gonna have to try to deal with it. I was hoping that the leg that we had that was going to break the downtrend line that I've got here, which is now at about 29.37, would have been done by today, and it hasn't been done.
Okay, well, thank you, Basil.
Thank you for calling, and let me know how you do and what you do. But in the meantime, the doji candle from last week so far, the on-balance volume and the stochastic have tried to turn up from there. That's a start, and that's why I'm saying that if the XLF is able to trade in the 2940s anytime by Monday afternoon, Tuesday, I think that's a good sign. I think the XLF will have a better run if it's able to do that. Thanks for calling, Mike.
You're welcome.
Thank you. Let's go to our next caller, Dan in North Reading. Dan, how are you?
Good. How are you?
Wow, I haven't heard from you for a long time. You well?
I'm good. I've been listening. I just haven't been calling.
Okay, well, a Mexican ETF trading at 50.98 EWW. You are doing what?
Well, nothing at the moment, but I'm kind of tempted to go long on some sort of pullback here. I've been watching this as it seems to move inversely with the USD MXN, and I know you're bullish on the dollar, but the dollar versus the peso doesn't look so great right now.
So I've got this in an F/B above the 200 period moving average, above the 9 period moving average, above the 14 period moving average. The MACD is good. Now, if I had said to you, not you, generally out here to the audience, where do you think the Mexican ETF is? Now, this isn't the actual index. This is based on the index, but sometimes they can have different chart formations. If I say that, I want to say, gee, Mexico right now, probably towards the lows. No, the lows were under 44 in the 43s and it's trading at 51 right now. And that's why I always say, don't listen to the news. Look at the chart. And I'm with you. I think it's held very well. The 49.72 to the 48.63 area should be good support in any pullback. I probably in agreement with you that, yep, it could go a little higher. That means you might have to wait maybe 3 weeks, 2.5 to 3 weeks. But I think if it comes back into the 49s, maybe the high 48s, that's a time to be looking at it because that weekly chart has improved. And the monthly chart, I used to have this all notated. Of course, I don't anymore. The monthly chart has held the 200 period moving average now for over 2 years. No, 1.5 years since January of 2016, 17, 18. No, it is 2.25 years, making a second arch formation in the lowercase m. This, I must say, this looks quite good. I'm in agreement with you, but there are two ways of doing it. One is to say I'm going to nibble right here at 51.03, even though this could be a little topping area, but the stochastic holding beautifully at 95%. They could go on for another week or two in the mid-90s. So you could nibble right here saying, this is just a feeler position. The real position I want is about 2 points lower, 1.5 to 2 points lower. And this is going to give you a good feel. The big problem is you buy it here for just a little bit, so you got 51.03. Next thing you know, it's trading at 51.80. And you say, wow, am I ever going to be able to get that extra position? Well, that's a nice problem to have because you've got a really good feel for what the EWW, the iShares Mexico fund is really doing. And it keeps you mentally in the game. And that's very important. So those are two ways that I would look at it, but I agree with you. I like it. It's a single leg A up in the weekly chart, but the monthly chart is making higher lows, and that's really important. And it's way above the 200 period moving average, which has been the magnet and the propellant for the monthly chart for a long time. Whoa, I'm surprised. I'm going to write that down. EWW, keep an eye on it. So Dan, I'm with you.
All right, great. Thanks for the info.
And good eye. Thanks for bringing it to our attention. That was Dan in North Reading. Question now I had was, George in New York. George, I said to you today I would go through Monster. Where did I type it? I typed it on the wrong chart right here. So Monster Beverage, this is very interesting because it's filling in the gap in the monthly chart. Very difficult to have a gap down, huge gap down in a monthly chart because the implication is going It's just chance that it closed 1 month at a particular level. Next month, the very first day, it gaps down. That's just chance. But when it happens, it's an eye opener because you want to see that it can fill the gap, and it needs to get to 68.44. And today's push to the upside is 61.23. Oh, that's interesting. 61.15. Did I say that? 61.15. We're right there. We have filled the monthly gap. Wow, it's tough to do, and it's done that. And I said to George, I like it very much. Where you want to take a new entry point is in the between 58 and 56. At least that's where we want to have a look at it to see if this is the place. But you already have a position, and what I say to you is I like it. I just wanted to be kind of clear in my own mind as to that weekly chart going in a single leg A, not necessarily straight up making higher highs every month, every week, and higher lows, but also moving sideways, which is much more bullish than just vertical. So on the week of the week of the 18th of May, 47.61. The week of July the 13th, 61.23. That is a fabulous move up. You can expect some consolidation at some point, but this is a very nice action. So MNST 61.06 up 82 cents right now. I just wanted to continue that thought. Next question is XAL. XAL, I'll get to the question about peaks, took out Tuesday's high. Oh, did it really? Okay, then let me get to that. XAL, nice little bounce because crude oil is pulling back. It's up 169 at 101.50. This is going to be very important. What I said was it's testing the XAL, the ARCA airline index, leg DE, leg E to the downside weekly, and testing the 200 period moving average. MACD is trying to at least flatten out. That's not so good, but the stochastic has turned up. It's at 11% now. Yeah, this could be the time that the transports have a little bit of a bounce because crude oil is pulling back. So the question there was Sarah XAL, DAL was probably having a little bit of a bounce today. Nah, not so great. It's leg B, but it's not a very bullish chart formation. AAL, we looked at yesterday, was looking horrible, and today it's not so great. Very selective, but this should be the opportunity that XAL takes to move higher. The IYT, funnily enough, is up 1.22 at 189.07. Made that peak seeds, put them. It's just telling me this is together with the Dow was saying, and the SMHs was saying that we haven't got all systems go, and that's going to be very important. Next question I had was, the SPX took out Tuesday's high. Okay, I want to double check that because maybe at the time when I looked at it, it hadn't. Oh, it's taking it out. We're in leg C to the upside. I like what I'm seeing. I don't think this is an F. It has all the characteristics of a C, and this extends leg D in the weekly. I think we're going to go a little higher. Maybe chop, chop, chop. Doesn't have to be very much higher, but I do believe this is very important that we snuck to a new high, recovery high, not all-time high. That's a 287, 2008-72s. Next question I had was Caterpillar. Maybe Caterpillar's bouncing here up to 138.76. That's that same pattern we've been looking at. You know, the basing formation that I've spoken about in these last 7 or 8 charts, this is going to be very important. So, yes, there was a fairly low reading in the trend gauge today, but it wasn't low enough for me to make any Chapman wave notations of importance. So let's keep that in mind. Boeing is the one that's really important here. I mean, evidently they've got a backlog that goes to maybe 5 more presidencies to come. I mean, it's 20 years. I don't know how many years you've got, but at the same time, I've been around when Boeing's back orders and the airline in general have been ordering, and out of the blue they say, you know what, we're prepared to forfeit our deposit, but we can't buy those right now. I've seen it happen before. It happens in bad times, of course, but just keep in mind that can happen. Right now, up 4.24, nice action in Boeing. This is leg A, B. Leg B, it goes to leg C, about 348 round number high, made 3 days ago. We'll see what happens. Next question I had was, so I did that. ERJ. ERJ is Japan, right? ERJ. Oh, wait, Japan. EW. No, this is ERJ. Embracer. A little far away to see this tiny print. Trading at 22.50. I think the question is, can it bounce? And the answer is, I don't see much here at all. Not at this time. I'd give it a miss. ERJ trading at 22.49, up 30 cents. I could be wrong. What you need to see in this little arch formation is trading at 22.49. It needs to get to 23.20 by Monday afternoon. It needs speed, and it needs speed and power. All right, I don't see it right now. Next question I had. There was one from way back. Oh, yeah, right. Oh, so the question is, what about the other IYs, like the IYC? The IYC, which is the iShares US Consumer Services, made a peak C. And that to me was so unusual. There was just no other way. I counted this backwards. I counted it forwards. I turned it upside down. I did everything I could. But all I could say is, nope, that was definitely a peak C. And it's an E/E in the weekly chart on the IYC, iShares US Consumer Services ETF, and it had a spectacular move. I was talking about it for quite a while. Spectacular move to, this is an E/C. Got it. Okay. Nice action today, up $1.15 at 199.17. And what's really important about this is that it's just a hair away from making a new all-time high to go to leg D in the daily. 200.57 starts leg D. But not only that, just as well I did this. Let me do that again. A, B, C, D. So because that is not a new low, this can be called E, B, C, and we've got a D. We've got a what is called a gray D underneath the previous peak D. I think it's going to go to a new high. So I like it. The IYC US Consumer Services ETF trading at 199.17. The IYC is up $1.15, up 0.58%. And no, this would normally be the start if that was a D. This is just a continuation pattern. Let me show you. Little Chapman wave methodology here. Here's your brand new A. This is your brand new B. Did I miss one? Oh, this is a brand new B. Oh, there's always one chart that says, you know what? I'm doing something different. That's a D. That's a down arrow because the MACD turned down. It closed decisively under the 9-period moving average. Then this has to be, this is in a leg C right now. Oh, just as well I did this, because otherwise it would have been embarrassing, it would have been wrong. Being the creator of the Chapman wave methodology, this low has to be trough C, correct me, up A, B, and this slightly low is a trough C, and this trough C says brand new buy mode, although it's still underneath the previous high. I should call it a gray C. It could fail. I think it's going to go to a D. So this is going to be very important. Can the IYC make a new recovery high for that cup formation? If it fails, it's going to fail within 2 days without making a new high. The next thing you know, it's in the 196.30s failing. So this is very important. I do like it as I see it based on what information we have at this current time. All right. Yeah. So this is what I want to look at. Within the context of the Dow, there's a cup formation. Remember the 120-minute chart? I spoke to you about it yesterday. I said it made a Chapman wave peak D, a Chapman wave 5, should be pulling back. Would it only pull back briefly to the 24,663 level? Yeah, it's 300 points almost, but that's no big deal these days. And it's come back almost all the way. I like this. Look at that handle. Cup and handle. But it's not a true cup and handle. It's one of those that I make up based on the left side high. Let me make it clear. Preferably a close, but a push above 24,945 between now and Friday would be very positive. I'll be back straight after these messages.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So one of the things I want you to talk about, I had a question about what's my target for the QQQs. I have a variety of left side, right side price time matches, which were taken out. I have the Fibonacci. You can see right here. It's still perfectly back in February, March at the 174s. Power Shares QQQ Trust Series pulled back quite sharply, held, just went under and then held the 9-period moving average support and then rebounded. So the next big pullback in time and price really will give me the sense of the regeneration of the turbocharge that's needed to really skyrocket into the 200s. That's a long way to go in time and price. It might be priced because of the acceleration period. 2019 is going to be very important, but all I can say is I don't want to go there. I just want to say right now, broke to a new all-time high. That makes the 175s to the 173s very important support on a weekly basis. All right, next question I had was, where was it? Oh, I was just about to go. That's right. See, the IWM earlier in the day, it pulled back. It pulled back under the green line is the 9-period moving average. The black line is the 14-period moving average at 166.96. It went to 166.64. I did no intention today to buy the TZA, although it would have been a fantastic entry point, because look what would have happened. You would have got the TZA, which is the inversion 3 times long, you would have got it. Where did it open? It opened at 8.56. It shot up to 8.78. Hey, 20 cents on the 3 times, that's big. But what do you do now at 8.56? I don't want that. I think that the IWM is in a phase where it's going to try to rally a little bit more. Will it be able to go to the 170.20 level? I would say that if it closes green today, right now it's just up 1. No, I shouldn't say that. If it closes above 168.45 today, I think it's going to try for a leg C. And that's the reason why this is such an important phase right now. We're fulfilling the upside potential. Will the Dow, the S&P actually go to new highs now rather than later? For me, that's a really big question. I hope you're able to answer it by tonight so we know what to do. I'll be back tomorrow. Have a great day. Stay tuned for Steve and all the other great hosts. Back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.